Welcome to Crypto Signal. Ever wondered how pro traders profit while beginners struggle? In this video, I'll reveal powerful trading strategies, smart investment techniques, and essential risk management tips. Let's dive in. 2 key market analysis strategies. When it comes to crypto investing, you need to understand how to analyze the market. There are 2 main methods: fundamental analysis, FA, and technical analysis, TA. Fundamental analysis, FA, the investor's mindset. And OFA helps you evaluate a cryptocurrency's real-world value by analyzing factors like the team and project goals, who's behind it, what problem does it solve, market adoption, is the crypto widely used, tokenomics, supply and demand, staking rewards, inflation rate, news and regulations, government policies can impact price. Pro tip: always check the project's white paper and roadmap before investing. If it lacks a clear use case, it might not be a good long-term investment. Technical analysis, TA, the trader's playbook. TA, on the other hand, focuses on price charts, patterns, and indicators to predict future movements. Key indicators for beginners. Moving averages, MA. Identify trends. Example, 50-day and 200-day MA. Relative Strength Index, RSI. Measures if an asset is overbought, above 70, or oversold, below 30. Support and resistance levels. Key price points where a crypto is likely to bounce. FA is great for long-term investing, while TA is essential for trading. The best strategy? Combine both. Pro tip: don't rely on a single indicator. Always confirm your analysis using at least 2 indicators before making a trade. 3 powerful trading strategies. If you want to actively trade, here are 3 common strategies traders use. Day trading, the short-term hustle. Strategy: day traders buy and sell within the same day, taking advantage of small price movements. This requires fast execution, deep market knowledge, and emotional control. Best for highly liquid coins like BTC, ETH, and BNB. Pro tip: use a trailing stop loss to lock in profits while protecting your capital. Swing trading, the wave rider. Strategy: swing traders hold assets for days or weeks, waiting for bigger price moves. It's a balance between short-term trading and long-term investing. Best for trending markets with clear upward-downward momentum. Pro tip: identify strong trends using the 200-day moving average. If the price is above it, the trend is bullish. If below, it's bearish. Scalping, the quick profit tactic. Strategy: scalpers execute multiple trades per minute or hour to profit from tiny price fluctuations. High risk, high reward. Best for experienced traders who can handle stress and split-second decisions. Pro tip: use low-fee exchanges like Binance or Bybit to reduce trading costs. Since scalping involves multiple trades, fees can eat into profits. 3 risk management rules. Now let's talk about the most important rule in trading: risk management. No matter how good your strategy is, you need to protect your capital. Golden rules of risk management, the shield strategy. Never risk more than 1 to 2% of your portfolio per trade. Use stop-loss orders to limit losses. Take profits at planned levels to secure gains. Pro tip: follow the risk-reward ratio, RRR, rule. Only enter trades where the potential reward is at least 2 times the risk. Example, risking $100 to make $200. What is a stop-loss order? A stop-loss order automatically sells your crypto if the price drops to a certain level, preventing massive losses. Example, you buy Bitcoin at $40,000. Set a stop-loss at $38,000 to limit losses. Set a take profit at $45,000 to lock in profits. Pro tip: don't place your stop-loss too close to the current price, or it may trigger due to normal market fluctuations. Give it room to breathe. Trading is not gambling. Always have a plan and stick to it. Which strategy will you try first? Day trading, swing trading, or scalping? Comment below. If you found this helpful, like, subscribe, and hit the bell icon for more crypto tips. See you in the next one. Disclaimer: the content provided by Crypto Signal is for educational and informational purposes only. We do not offer financial, investment, or trading advice. Cryptocurrency markets are highly volatile and unpredictable. Always do your own research, or DYOR, and consult a qualified professional before making any financial decisions. Crypto Signal is not responsible for any gains or losses resulting from the use of this information. Stay safe, stay informed, and happy investing.